Property investment can feel overwhelming, right? Buy to let, rent to rent, HMO, flip, serviced accommodation. And suddenly you're thinking, which one is actually right for me? Well, today we are breaking it down. I'm going to walk you through the main property investment strategies, the pros, the cons, and most importantly, how to figure out which works for your situation. So let's start with the classics. Buy to let. This is where you buy a property, rent it out, and earn income month after month, while the property hopefully grows in value over time. The good stuff here is it is predictable, you get predictable income, it is straightforward to understand, and there's a long-term growth potential. The challenge is, however, well, you need to have a deposit and a mortgage, your cash flow might be tight, and the interest rate changes can impact you. So who is this for? If you got some capital, a stable income, and you are in it for the long haul rather than quick wins, buy to let can be solid for you. Next up, rent to rent. Here, you don't own the property. You rent it from a landlord, then rent it out yourself, often as an HMO or serviced accommodation. Now, this is the reason why people love this. It is low entry cost, no mortgages, and your cash flow can be amazing if you do it right. Now, here's the catch. You won't get property ownership, so no capital growth. Plus, you have to manage the property well, and your agreement, it needs to be airtight. Who is this for? If you are low on capital, but high on energy and management skills, rent to rent could be the perfect fit for you. Now, let's look at HMO, houses of multiple occupation. You rent out rooms individually instead of the whole house. It is especially great for student tenants and young professionals. Now, here's the pro. It has high rental income, strong cash flow, and the demand is usually consistent if you pick the right area. The cons, there's more management, there's licensing issues, and set up costs. Now, who is this best for? If you can handle or outsource management and cash flow is your goal, then HMO definitely outperforms the single let. Alright, the next one is flip. Quick pause, hit subscribe, and join a community of property investors that are getting insider knowledge that most people pay thousands for. The next video might just be the breakthrough that you need. Don't miss it. Hit subscribe now. Now let's talk about flipping. You buy a property below market value, you refurb it, and you sell it for a profit. That's flipping. Here's the good stuff. There's a potential for lump sum profits. You get faster results and rapid capital growth if you do it right. However, the risks could be high if your numbers are wrong. Also, there's no recurring income, and again, market timing really matters. So who is this best for? If you have capital, you got good project management skills, and you have an eye for value, then flip can be very profitable. So finally, serviced accommodation, short-term lets. Think Airbnb, Booking.com. The downside, seasonal demand, heavy management, and you can have some stringent regulations in some areas. Now, who is this best for? If you live in a city with tourists and business travelers, and you can manage or outsource operations, then serviced accommodation can be very lucrative for you. Now, here's the most important part. The best strategy isn't the trendiest one. It's the one that fits you. So ask yourself, do I have capital or time? Do I want cash flow or long-term growth? Can I manage people or systems? How involved do I want to be in the day-to-day running of the property? So if you have low capital but you want income, rent to rent is great for you. If you have capital and want stability, buy to let might be the best option for you. If it's all about strong cash flow for you, then HMOs or serviced accommodation is definitely the best option. And if you're after quick profit, then flipping it is. One mistake I see all the time is shiny penny syndrome. People jumping from one strategy to the other without mastering one. So it's important for you to pick one, learn it properly, execute it, then you can scale up or even diversify to other strategies later. But remember, property investment isn't about copying someone else's journey. It's about building a strategy that fits your lifestyle, your finances, and your goals. Alright, that's the end of this video. I hope it has been helpful. If you really learned something from this, please like and subscribe, and even you can go as far as leaving a comment below telling us the strategy you are leaning towards and why. I'll see you in the next video. Peace out.